And we are live. Welcome and good morning. What a beautiful Sunday morning. This is Money Matters, going live only on onedealaway.com, streaming and broadcasting live from Providence, Rhode Island, United States. And for my international viewers, if you have no clue where Providence, Rhode Island is, that's okay. We are the tiniest state in United States, located just minutes away from Boston. So there you go. At least you know where I am located. This morning we have an incredibly amazing show. We're going to be covering all kinds of cool business news. For example, like what's going on with Amazon and what are they doing? What is the sort of innovation of the future? What is everybody working towards aside from just blockchain, of course? And then what is going on around the world when it comes to the markets, GDP, and that kind of stuff. So, what can we expect? And of course, there is yet another fraud from a business, and that is exactly what we're going to be covering today. So, stay tuned in. And good morning again. So, welcome to Money Matters show. Super excited for today's episode. It is Sunday, end of May, officially, last day of May of 2020. We are officially entering June tomorrow. So, and for some of you, depending on where you are, it already might be tomorrow. Beauty about the world. So, let's talk about what's going on with Amazon. And you see space, and you might be thinking SpaceX, but that is not what we're going to be discussing. Amazon is looking to compete directly with car makers, and it's moving into the self-driving space. As you know, Tesla has been one of the companies that really took over this entire thing, and Tesla's sister company, as I like to call it, just because Elon Musk, kind of started both of them. SpaceX flight went swimmingly yesterday, from what I hear. So that is beyond exciting that we are back in space. But let's talk about sort of what's going on with Amazon. Of course, Jeff Bezos' net worth jumped nearly 5% last month after the stock hit a record high because the unprecedented demand given everything that's been going on around the world. But in a developing story, the company is expected to further improve its stock price and strengthen market penetration as it emerges into the transportation field because they are competing directly with car makers, package delivery firms, even ride-hailing companies. So it's one of those things that definitely Amazon is working on becoming a company that is way too big to fail. Not that they're in any financial trouble that I know of. You might know a little bit more, so make sure you hit me up. Let me know if you have any details that I don't. So, to achieve the goal, it will need to build its own logistics ecosystem and invest in electric and autonomous vehicle startups. By making such moves, Amazon could lower its shipping costs to the point that partners like UPS become competitors and, I would argue, potentially obsolete. So, it's definitely going to be an interesting thing of what's going on. Now, in fact, Amazon has already initiated talks to buy self-driving tech startup Zoox, a deal that would follow sizable investment in automated driving startup Aurora Innovation and Rivian, and an American producer of electric trucks headquartered in Michigan. So it's one of those things that is going to be very interested to kind of see what's going on. Um, the experts see the self-driving technology as a natural extension of Amazon's effort to build its own logistics network and could save the firm more than $20 billion a year on shipping costs, according to Morgan Stanley. So this is kind of what ends up happening. You start a little bit small, you end up expanding, and we're seeing all these large companies. Amazon is expanding into the blockchain and cryptocurrency, believe it or not. They are, they. I don't know if you know this, but they have purchased Twitter. Not Twitter. Sorry, Twitch. My gosh, fake news, Nave. Fake news. Twitch, not Twitter. Twitch. Streaming platforms. So they're getting into the gaming space. They're getting into the cryptocurrency space. They're getting into the blockchain space. They're getting into the logistics space. They're getting into the self-driving space. I mean, they are definitely expanding. And all it was at one point was basically an online bookstore. If you look at some of the other large companies that you may love or hate, like Facebook, Facebook has been getting into all kinds of stuff. It was just a place to look up, your local college girls as a peer because you were too shy to talk to them. And it's turning into, a third of the world's population using it, running businesses, advertising, marketing firm, selling of the data. But they're also getting into the crypto space, into the blockchain, buying all kinds of stuff and getting into all kinds of different things. So it's definitely going to be interesting, and it won't surprise me at all if some sort of antitrust law starts heating up. And if you were paying attention and have been watching the channel for a little while, you'll remember that we already did talk about the fact that there are some of that stuff happening. And so it will definitely be an interesting thing to see. Part of it is that it makes it much harder to compete with them. The other part is that if you're a startup like Zoox, for example, here in the story with Amazon, you hope to build something and then get bought out for billions so that you can retire, sit somewhere on the beach, or potentially start something new. All right, so buying Zoox, a startup working to create dedicated new autonomy vehicles targeting the robo-taxi market, could potentially open door for Amazon to compete in the ride-sharing and food delivering industries, rivaling Uber and Lyft. By expanding on Zoox technology, the world's biggest online marketplace could offer discounted ride-sharing for Prime members, a move that could help Amazon attract and keep more customers. You already get all kinds of perks as an Amazon Prime member, from free shipping to videos to games, all of that stuff. With the purchase of Whole Foods, now you're getting that stuff over in the food sector as well. So they are definitely expanding and exploding. And like I said, it's going to be interesting. But if you thought that the self-driving market is only Amazon's game, I have news for you. Check it out. SoftBank led $500 million investment in Didi in China's biggest autonomous driving round. So Didi is sort of like an Uber of China, right? And they actually said that here. Oh my gosh. And I did glance it, but I didn't have time to read everything this morning, so my apologies. So basically, they are leading the round, fastest, single largest fundraising round in China's autonomous driving sector. And its existing investor SoftBank, the Japanese telecom giant and startup benefactor that has already backed Uber. So, if you're a bank like SoftBank, which is actually a telecom giant, what we're seeing right now, the part that I am pointing this out right here, the fact that you have a telecom giant that is becoming basically a financier, is the something that you should be paying attention to. One of the things that we are seeing more and more is that these companies, these large companies, you started as a company focusing on one particular product, then you start expanding into different markets, into different industries, like Amazon, like Facebook, like all the other places. But then, you start going in and realizing, wait a minute, financing has a lot of power. And so you see companies effectively turning into banks. So that's kind of what the interesting news is with the SoftBank. Now, the proceeds came through SoftBank's Second Vision Fund, which was reportedly lagging in fundraising as its Fund 1 recorded massive losses in part due to the collapsing valuation of WeWork. You likely remember what happened there. But, one of the things that is interesting is that Didi is developing robotaxis, which could help address driver shortage in the long term. So, not only are they building the fleet of vehicles like Uber, Uber is very different because Uber, you get like a human driver. It started with their own car. I think Uber is now allowing drivers to like lease stuff. You see Uber is sort of cutting their employees, and you see places like Amazon and Didi, and I'm sure that there's other companies as well out there in other spaces that are starting to utilize the driverless vehicles, autonomous vehicles, to actually enter this space. And quite a few years ago, I said one interesting thing that everybody laughed at, and of course, I am very used to that by this point. Typically, people laugh at me early on when I make sort of a statement, and then it kind of comes true, and they scratch their heads and go, "How in the world did you do that?" I don't know necessarily how I always do that. It could be sixth sense. It could be all of the geeking out about the business and just sort of having an understanding of where we're heading. But I have been talking about autonomous vehicles being the future. That whole like us driving to work and stuff is not going to be a real thing. That we're going to have these super highways that only smart vehicles will sort of live on and move at ridiculously higher speeds than we ever could as humans, and human drivers won't even be allowed to go on it. You won't have a need for a garage, and there will be these basically kind of like industrial garages that autonomous fleet basically goes in to charge. I do expect that vast majority of them will be electric, and so that's kind of where I see the space going in. I could be wrong, but then again, I also said there's going to be a time where people are going to predominantly work from home, have multiple jobs, and that the government is going to have to come up with some sort of payment plan and potentially debt jubilee. Now, of course, not all of that stuff has come true, but part of it is and has, and so we'll see kind of how it goes. So this is an interesting thing to see, but here's the thing right here. So robotaxis will become a reality only when you have the necessary operation skills, technology, and the government support all in one place. And I think that is going to come. That is going to come soon enough. And we could potentially see the coronavirus and the fact that people don't want to be in cars or in close proximity with total strangers. This could definitely speed things up. So here we go. All right. So Great Depression, like jobless rate seen for U.S. eco week ahead. So here we go. Bloomberg is reporting the devastation of the pandemic on the U.S. labor market. We've already kind of covered this stuff, but let's just sort of recap it really quickly. Friday's job report likely to show the unemployment rate soared to nearly 20%, and employers cut millions more from their payrolls in May. It's actually more than 20%. They're underreporting it. And yes, they are depression level unemployment rates. So the median forecast in a Bloomberg survey calls for a jobless rate to rise to 19.6, the highest since Great Depression era of 1930s. Payrolls probably declined by almost 8 million after a whopping 20.5 million slump in April. Again, I think they are undershooting this stuff, but what do I know? I am just a guy doing these weird shows and occasionally offering classes. So PMIs for May will be closely watched to assess the pace of the region's recovery. Australia's central bank board met on Tuesday with no changes expected to its target for 3-year bond yields or the crash rate, both set at 0.25%. The first quarter GDP for Australia's will be released. So that hasn't happened, but I expect that it's going to go down because what we're actually seeing all over the place, y'all, is that, things are down. Things are down. Economy around the world is down. It is shrinking, and that is deflationary through and through. And so, when the deflation kind of comes in and hits, you can expect that the bonds are going to do pretty okay. I'm not crazy on the bonds necessarily because you're not going to see these crazy rates. The nice part is that potentially the savers could benefit in the short term before inflation picks up. So the savers, and if you don't know what that is, that means that you put portion of your earnings aside and you don't spend it. So if you would like to learn how to actually easier kind of manage your money and stuff, join me for Academy at One Deal Away. It is one of the courses that we do offer, in addition to how to eliminate destructive debt, as well as how to invest in real estate and different strategies that exist with that. And of course, we are offering a Crypto 101 course, which is actually being live. Right now, we're doing that live and doing it absolutely 100% free. So if you're interested, you definitely want to go and check out onedealaway.com, and you'll be able to find all kinds of information right over there. So what they're saying is that the Federal Reserve is in a blackout this week before its next regulatory FOMC schedule meeting later this month. But we've already seen that, we've already talked about it. So thank you, Yahoo, to catching up to Money Matters. It's quite lovely to actually be ahead of the news as opposed to lagging behind. So, and if you want to be ahead, you definitely want to come and check out live show onedealaway.com live 7 a.m. every single morning of the week, because money never sleeps, and you want to watch before everybody else does so that you have unfair advantage in taking action. So Brazil's GDP falls most since 2015, and COVID kind of starts rising. The pandemic is, going nutso in Brazil, and my sincere apologies to Brazil and Latin America, because I know that this is coming your way, and it's going to get much worse than before it gets better. So it triggered a 1.5 drop in gross domestic product from previous quarter, and it's bringing it back to the same level as 2012. And this is just the beginning for Brazil, unfortunately. Indian economy slows down in March quarter, with worse to come. So they are dealing with all kinds of stuff in India. If you've been following news over there, this country has really been ravaged with a lot of things. So they're suffering with, of course, COVID-19. Heat wave has come in their way. And then they actually have the attack of the locusts. So, they are just getting kind of hit left side and right and sideways. And then, of course, there's some sort of dispute with China about the borders. And when it comes to disputes, we're seeing that going all over the place. U.S. Europe, U.S. Mexico, U.S. China, India, China, Europe, within U.S. I mean, it's everywhere for different reasons, and we're seeing that stuff. And I'm afraid that pre sort of riots and disagreements and anger and stuff is going to be 10x of what we are seeing now. Now, one continent that is giving me hope in what potentially could come is really, Africa. Africa is basically starting its free trade area, and it's sort of moving in direction. It's a very interesting continent to pay attention to. I think it is going to be over the next years, potentially even decades. It is going to be quote unquote new China. China quite a few decades ago was sort of this scary place where early investors could go in, make quite a bit of money, and benefit a great deal. And I think Africa and African countries and a continent is going to be the place where business deals are going to be done, and ridiculous sums of money are going to be made, hopefully by the locals as well. We're already seeing that we used to have a progression of, you went from like a giant PC to a laptop to, a smartphone and that kind of stuff. And what we're seeing is that they are skipping over some of that progression. So they are straight into the cell phones, straight into the mobile. They do have their version of Uber already that is existing. It's actually a company that is out of Europe, and I think more of that will be coming their way as well, that is going to solve some of their problems. We are seeing African continent really driving the cryptocurrencies and Bitcoin adoption with trading and that kind of stuff happening. So it's definitely interesting piece to watch. And 2 years ago, the African Union Summit, they were basically going to implement stuff in July of 2020. Because of COVID-19, they're basically pushing into 2021. But there's some amazing thing happening with Africa because they wanted to unite and kind of create the free trade deals. Now, of course, we could potentially see some changes similar to what we're seeing in EU right now, similar to what we've seen with the NAFTA stuff, where they're going to reorganize and change stuff. And that is normal. It's part of the progression. You agree to one thing, then people kind of like start shifting around. So it's definitely going to be a great continent. Yes, there's a lot of uncertainty, a lot of things that are unknown. But I think that's the place in the uncertainty is where people start seeing a lot of ability to profit. This is the reason why today's market of what you're able to do, if you're able to get into some of the deals, is incredibly going to be incredibly successful if you know what you're doing. And same thing with the cryptocurrency. Such a new asset class that there's a lot of disruption that you can make and potentially make a lot of money. And same thing goes for Africa. So I am excited for Africa. Now, I promised the scandal, and you might have heard of Luckin Coffee. And so now we're actually seeing it's a publicly listed company out of China. It's a Chinese coffee chain. And unfortunately, it's hitting the headlines because, well, they sort of lied. That's in business world called fraud. And they basically, purportedly, let's use the correct terminology, juiced financials by creating vouchers to sell fake buyers connected to the company. Millions in fake revenue were reported to boost the company's growth metrics and impress shareholders. And these news are actually hitting, the news, hitting the individuals and investors. And, this right here, the fact that a company can make up its own sort of accounting and that kind of stuff is where some of the decentralized finance and blockchain technology and that kind of stuff could be incredibly powerful and important because it prevents you from being able to do some of these things. So the new executives have been brought into the turn to the tide. It remains to be seen whether they can do so. It will take time to recover, of course. And, there is the newly audited financial statement reveals $140 million in charges for raw materials within just a few months, and which is ridiculously high comparing to similar business models. And so this is kind of where they're basically saying, here's the fraud and here's what happened. And of course, the stock erased 90% of its value upon shares reopening. So there you go. That's something to kind of pay attention to. And I always say, if you're going to invest in a publicly traded company, you want to know what kind of company you're investing in, what you're investing in, what's going on, and you want to be able to understand of who's behind it. Part of the problem when you invest in equity is that you don't know if that CEO or the leadership or the employees are going to behave well or not. Your only hope is pray, right? Pray and hope that they will do right by you, right by the company, right by the stock, so that you can make money alongside them, that they won't defraud you, that they won't be silly things, they won't be doing stock buybacks and silly stuff that we're seeing all the time. And so, that's the reason why I believe in becoming sovereign individual, creating investments outside of just the stock market, and I believe in true diversification between the asset classes, and I'm not even all that crazy about paper assets. So there you go. Japan. What's going on in Japan? We haven't talked about Japan in a little while, but they just got another $1 trillion shot in the arm, and basically they're injecting another $1 trillion into the economy to protect from the effects. So they have approved $1.1 trillion relief package, which is double what actually has happened in April. They're trying to do the same thing that the rest of the world is trying to do around, well, rest of the countries around the world are trying to do to protect their people and the economy. And so the new measure will bring the total Japan stimulus spending to $2.2 trillion, dollars, a staggering amount equivalent to almost 40% of the annual output of the world's third biggest economy. We have been pumping, I want to say we're well over 7 trillion, being the largest or second largest, depending on kind of the day and what's going on between US and China. But, and Europe, of course. But, it's one of those things that I think we'll see more of this stuff. So printing will continue, and, this is not going to go away. So you can definitely look to see more of this stuff, more of these news kind of coming in. And it's going to be one of those like, it's just another trillion, It's shocking at first, and then you were like, they've been doing this for a while, and they're going to continue doing this for a while. Here is news that China promised last Friday to basically put in half a trillion at its economy this year, an extra stimulus measure as a part to create 9 million jobs and blunt the impact from pandemics. Let's see, Germany, France, United Kingdom, Italy, Spain, and other major economies have also announced the huge plans. So, like I said, it is going to be all over the place. All right, hydration, and then change the topic. Okay, my favorite topic to talk about, investment in real estate. So, excuse me, what's been happening in real estate? Well, real estate companies are cashing in on the PPP despite rules meant to bar landlords and other property owners from participating. Some firms have returned the funds after political public pressure, but some are holding on to it. So it's definitely interesting to see that stuff. And, they are, as they say, legally eligible. Uh, it could be wrong, but they are doing it. Now, office leasing. Law firm Cozen O'Connor will have a Midtown Conference Center thanks to the 7,100 square feet they just leased on the 30th floor of SL Green's 100 Park Avenue. The firm previously announced that they would move entire 55th floor. Financing. People are securing large construction financing for new mixed-use development sites. This is in New York, and if they complete it, it's going to become another medical office space and parking garage and some residential units. So, this is one of the new things that you're going to see. A, the cities require it to be a mixed use, but B, companies that are doing this stuff want to protect themselves. So you will typically see residential units because they are, important and likely demanded. Medical office space, potentially, I don't know, it just depends on what kind of medical office space. And then the parking garage, could be kind of lovely for the residents. But as we talked about, in relatively speaking, near future, that parking garage might just turn into the fleet charging garage. So let's see. There is a lesser group is examining possibility of issuing a new bond series. So that would be secured by a first mortgage on two properties in Brooklyn and one in Bronx. And of course, they're releasing it Tel Aviv Stock Exchange. So interesting thing to think. People typically think that real estate is local companies, and it is localized when it comes to investing and development. However, most of them are very, very large global companies that are all over the place, and a lot of them are public companies that you can participate in if you trust that kind of stuff. Retail. Macy's launched funding around offering 1.1 million in bond to get struggling retailer through the lockdown. So it will issue senior notes set to mature in 2025 that will be secured by 35 stores and 10 distribution centers. It will just be kind of interesting thing to see whether people will be buying, because we are seeing that retail is all filing for bankruptcy. And you know what? even as a bond holder, if they end up doing that stuff, you may get portion or none of your investment. So we'll see, but it also depends on the types of rates they're offering. So if that's something that you want to do, by all means, check it out. Okay. Other news: with interest rates falling to the lowest on record, this should be a better time for households to search for a new mortgage. But it isn't. Mortgage availability has tightened sharply as lenders impose tougher income, credit scores, and down payment conditions, and drop some loan types altogether, such as home equity lines of credit. So if you wanted to get into HELOC, that's a lot of them are dropping that. It's not happening, so you might be able to refinance. But again, they're looking for really supreme credit scores, and so. But there are folks out there. So if this is something that you're looking to do, don't give up. You can look into non-traditional ways to obtain financing if that's what you want to do. And of course, one of the things that you can do, and I recommend to my students, not a financial advice, just an educational sort of thought idea for you to consider, is to think through potentially getting into discounted properties. What I mean by that is there are all of these tax liens, tax deeds, and that kind of stuff, which is basically government foreclosure deals that you can get into properties for fraction of the value of it. And if you have a little bit of cash, you can get in it. Then you can go in and try to refinance by pulling just a small portion of it, which might make it much easier. Or you don't even have to refinance. You can just fix it up. Sometimes it needs it, sometimes it doesn't. Flip it. Sometimes you need to, sometimes you don't. Or rent it. And collect some income from that. So if that's something that you're interested in, the Academy offers that course. If you don't want to go into the whole Academy, you can actually just get the course itself. And that, of course, you can find that on onedealaway.com. All right. So Blackstone Group is the Kane Anderson Capital Advisors, Starwood Capital Group, and other investment firms are sitting on roughly $300 billion of equity ready for employment. So they are basically sitting on cash waiting, and they have been for a while. Every commercial property owner has its specific problems, but mom and pop landlords that own a handful of apartment buildings, retail centers, and other assets are in much more compromised position. And so what these large companies are doing is they're waiting for these guys right here, so the small guys, to basically fold over so that they can come in, pick it up at fraction of the cost, and 10x their holdings. Right, wrong, indifferent, but that's what ends up happening. And final piece for today. Gotta hydrate, y'all. Gotta hydrate. Drink that water. Okay. Real estate investing principles for navigating a crisis. It's sort of an interesting piece that is kind of cool to cover, and I wanted to cover really briefly with you. So one of the things that they're talking about is, this could be coming for a good time to buy. Depending on how you buy and what you buy, and if you don't know what you're doing, I invite you to watch the video. It's right there on Money Matters YouTube channel. You can actually watch the videos right there under investment sector, I believe. So just go and take a look at it, or you can put it in the search and find it, where I talk about what deals make sense to buy now and what deals make sense to wait for later. But what they're basically saying is, patience. And I agree. Deals are going to be coming. They're going to be amazing. But you're going to have to practice a little bit of patience and keep constantly looking and searching. And, of course, you want to be constantly looking and searching for that financing if financing is something that you want to get. So don't give up. You got to have a ton of patience, and you got to look at a lot of deals. I'm not talking like 3 and select one. I am saying look at 50, 100, 1,000 deals before you select one. And I know it sounds like a whole lot, but that's the best way to find some of the most amazing deals and not feel like, you've lost something because you invested in one thing and now something better came on, but you're locked in a deal. Cost analysis. You definitely want to understand what is the price versus value. Does it make sense? What the costs are going to be to carry that financing? What are the taxes implications now and in the future? How are you actually going to benefit from it? What is your exit strategy? Is this a flip? Is this a long-term rental? Is this going to be an Airbnb property, which I don't know if you're going to do quite yet. It could potentially work out later in the future, but there's some downfalls. And again, I've done a bunch of videos and this stuff, so check out the channel Money Matters on YouTube, and you'll be able to learn a lot about different things, just so you can have ideas. So things that you to pay attention as well is that you're going to need to put in substantial amount of down payments typically, so you got to plan for that stuff. Liquidity, they're basically saying that, and I agree, you got to make sure you have some money in the reserves in order you need to take care of stuff. Insulation, and no, we're not talking about the insulation between the walls, although you should probably have that too. It's really more about having an ability to understand of where your property is located, and what's going on in that particular area. Are people moving in, people moving out? Are the jobs being created, jobs being destroyed? What is existing within the area? All of real estate is localized, highly localized, and so you want to make sure you pay attention to that stuff. So if you're interested, Forbes has done this stuff, so you can definitely check it out, and I definitely invite you to do that. So there we go. This completes today's episode of Money Matters, only here on onedealaway.com. And I invite you to join me tomorrow at 7 a.m. New York time, as I like to call it, where we're going to go live. You can ask questions, interact, and of course, if you're watching this on YouTube, make sure you still subscribe, make sure you like and share. It does help with us reaching more people. And until next time, stay forever money blessed. And to remember, you are only one deal away.